Hello to everyone. Well, welcome to all of you. If I look a little bit hot and flustered, I am. I'm in Mumbai and we have the second webinar tonight. And it's 10:30 at night here, so we just went for dinner. And I walked back, and in my 20-minute walk, I feel like I've just come off a rugby pitch. So Lee, I apologize as head of community. I would normally be wearing a jacket, but I feel like I'm about to burn up into 1,000 degrees here. So anyway, it's wonderful to have you online. Thank you for everything. And I think, Linden, you're online as well.
Yeah, hi, evening, everyone. Sorry, I am muted. My camera's taking a while to log on and become active, but I am here. Thanks, Scott.
Excellent. And so really from your perspective, we've got, will you just let me, Lee or Linden, know in terms of my internet quality, or if anything's not working? I'm working off my laptop tonight. We are in a, don't know if you'd call this a hotel room. This is Airbnb in Mumbai. And so I'm in my little area, and Paul and Ken will come back just now. But what we did want to do was to run through the second half of WealthE Wednesday. And so, Lee, before we get started, how has WealthE Wednesday been? How's the chatter been on the social media? Obviously, I really want to thank you for all the energy you bring to it and sharing it with everyone. But how's the day been? I've been a little bit out of touch. We've been driving all over Mumbai and meeting with high net worth Indians. We had a very good response from last night's event.
Well, that's fantastic news. So great. Well done, Scott. This has definitely been our most exciting WealthE Wednesday yet. It's our third one. And the chatter on all our groups, on our social media accounts, has all been great. So we've had a lot of engagement, a lot of people who have come back to us after the first webinar asking questions, how they can get involved, how can we KYC them quickly so that they can take advantage, and also asking about the Wealth University. So it's been really good all round. We've had lots of interest in your talk that you're about to give us on how we can survive the economic downturn that's about to happen, and that everyone's saying.
Actually, to be honest, Lee, it's pretty easy. You just need to move to India. That's the end of the talk. We can all go to bed now. Yeah, this place has amazing prosperity. The Indians, it's quite interesting actually.
Fabulous. Well, we look forward to hearing all about that a little bit later on. But to everybody, welcome. It's great to be with you tonight and to be sharing this. We look forward to your engagement. You will see that there is a question box. If you could just pop in all your questions there, and we'll answer it as we go through the webinar tonight. Linden is also online, as you know, so he can help with answering questions as well. But Scott always starts and says, let's get everybody into the room and onto the webinar. So in true Scott's tradition, we'd like to know where everyone has joined us from. So if you wouldn't mind just putting in the chat box where you're joining us from.
We do that for two reasons. In the little question box you'll see in the top right corner, we do that for two reasons. One is to see if you're actually engaged, and two is it's a bit of a test to see if you can actually find where the question box is, because that'll help you if you do have any questions to ask us. Because one of our intentions with these webinars is not to just make them one directional, but to have a conversation, and to be able to ask and answer as many questions and FAQs as we possibly can. Okay, so I see a number of people coming through. Wow, we've got Germany, Joburg, Canada, George, South Africa, Monkpur Strand, Mpumalanga, India. Interesting. I know Siska was having a bit of a heart attack today because she suddenly had to KYC a whole bunch of people from India, which is interesting. It means that we did something right last night, which is fantastic. Cool.
And we found out what a PAN is, which is awesome, because now we know that when we need to KYC people, we need a number called a PAN number, and so it's a learning curve for all of us.
Excellent, excellent. Well, let's rock and roll. What we want to go through tonight is, we want to talk. We always say to you that WealthE Wednesday is about adding value to you. We want to talk about property. We want to talk about people. We want to talk about profits, purpose, and we want to have a little bit of fun. The one thing I will say that for me is very important is that we have tried to set this up where Linden and Lee and myself did the webinar earlier today, the lunchtime session, and we spent quite a lot more time. If you're a beginner, and what I mean by beginner is if you don't know about Wealth Migrate, you don't know how we work, you don't know why we do what we do or how we do it or what we do, then we spent a lot more time on that part of the webinar in terms of at lunchtime. And the intention this evening is to not spend much time on that at all. You can watch the recording that we did at lunchtime, and really, you know, the intention this evening is to spend the time on the bonus. So if you look at the agenda that we've got, you know, the first 4 items is very much the conversation. Come and meet the team, come and learn about our why, our what, and our how. Come and ask anything you'd like to know about the platform, due diligence, past or present deals. Come and learn about the current deals, and come and learn about the new enhancements on the platform. So we spent quite a lot of time on that over lunchtime. If you've got questions, please, any questions that are asked, we're happy to answer, but we're not going to go through the presentation again, because people can watch the recording. And then what we're going to do is we're going to go through that quickly. We are going to go through the deals, because I think it's very valuable for people to know what the current deals are. And then we're going to spend, you know, certainly the second half of the webinar on the bonus session, which is how to not only survive, but thrive in a crash. And really want to look at some of the lessons and skills that we've learned over the last 2 decades in, you know, having watched different crashes happen around the world. So without further ado, I don't know, Lee or Linden, are we ready to rock and roll?
Yep, absolutely.
Excellent. Cool. So just to remind everyone, why do we do what we do? Why do we have the Wealth University? Why do we have Wealth Migrate? And why do we even have Wealthy Wednesdays? It's really based on Zig Ziglar's principle. You can have anything you want in life if you help enough other people get what they want. And so our intention tonight is to help you get what you want. And I would really encourage you to go into the question box and to write down one thing that you want to get out of tonight. You know, I'm a big believer, if you want to climb a mountain, it's critically important that you know what the top of the mountain looks like. So if you come along and you just sit here passively, you're going to hear a lot of information. I always get accused of, you know, it feels like you're drinking from a fire hose. And yet if you write down just one thing, okay, firstly, you're going to get clear on what your one thing is you're wanting to achieve. And secondly, is that during the webinar, you know, myself and Lee and Linden can look through those one things and we can make sure we cover them. So I really encourage everyone to just go into the question box and just type down one thing that you want. Now just imagine that Lee is a fairy godmother and she can literally grant any wishes that you want. So if you write down your one thing, then hopefully Lee, as our fairy godmother, will help you be able to get that wish. So I don't see anyone typing it down. Please understand that your one thing is quite a nice thing, because the bottom line is you can't get it wrong. It's just your wish. So, you know, just type down what it is you'd like to achieve out of this webinar. And the more clarity you have, the more power you have, and the more you'll get out of this. So thank you. Thank you to some of the others that have sent it through. To those of you that are sitting passively, you do not win the toaster. It's really, really important that you get engaged, because, you know, it's active people that get the results in life. And if you sit passively, you're going to get passive results in life. We speak a lot about the why, the how, and the what. You know, again, I'm not going to go into this in detail, but you really need to get clear on your why. And once you've figured out your why, then you'll get your how and your what. So if you look at this golden circle, and it's a great TED talk by Simon Sinek, why do you think I'm asking you what the one thing is you want to get out of this webinar? Because if you get clear on the bullseye right in the middle, why are you here? Why are you giving up an hour of your life or an hour and a half of your life? Why are you here? And if you get clear on that, then we can figure out how to help you get the how and the what. So I can see a number of people are putting it in, but I encourage everyone to really give it some thought, and even if it takes you 5 minutes, write it down. I'm not going to talk to you too much about our history. You know, a lot of you have heard my story and how, you know, how it evolved with my father, where, you know, he was, you know, he did what we were all taught to do. You know, went to school, went to university, got a great job, became financial director of a listed company. And unfortunately, when he passed away on the 1st of August, he actually passed away broke, and it had a material impact on my life. And, you know, I really wanted to make sure that I go out there and you know, when we studied wealthy people, I had to do it differently. I just couldn't understand how all of us, 99% of the population, was doing what we were told to do, and yet only 1% of us was passing. And, you know, marrying that together with technology, always had a love for technology, wanted to bring the two together, and literally said to, you know, as a challenge, why could we not make Monopoly a global game in real life? You know, we talk about the wealth gap. You know, I'm here in Mumbai, and literally the slums are horrendous here. You've got absolute opulence and absolute poverty right next door. And growing up in Africa, it was exactly the same. And when you look at all the stats, whether it's how much wealth the top 1% has, where you geographically live, whether you're a male or female, or whether you're a millennial, all of the stats and averages are against people. I also shared this at lunchtime. You know, I tend to find this very interesting. Depending on where you live, are you part of the top 1%? This is research that literally came out last week, which I found fascinating from Fortune magazine. But what was interesting is last night in India, I actually asked people whether, as an example, they're investing in medical buildings. And, you know, it's interesting because you can even be earning the income, but you might not necessarily have the mindset, and you might not be investing in the deals that the top 1% are investing, and then you're not going to be getting the same results. And so that's why when we look at the global stats around the world, you know, we truly believe the system is broken. And that's why we want to empower people. We want to empower you and I, the 99%, to be able to invest like the top 1%. We want to make it as simple as a swipe of a finger, and we want to make it from $1. And when one looks at the current system between the investor and the investment, there's literally just 16 different middlemen and a bunch of fees. There's no trust, there's no transparency, and with these high fees, there's no alignment. And that's really where we came in. We decided to build a marketplace. We decided to go out and find trusted partners. This is an example of a trusted partner in London. They literally list the opportunity on the platform. You and I, as global investors, get access to those opportunities. And then there's literally 4 simple steps. We sign up in a compliant way. We're not financial advisors, but you have the ability to select the investment which is right for you. You transact online, and then you manage your entire portfolio in one place, cutting out all the middlemen and putting you directly in contact with trusted partners and trusted properties. You know, you can go and read all about it on our platform, so I'm not going to go into this in detail. But when you look at our team, it's very much a balance, a geographical balance, people across 5 continents. We've also got a balance between real estate professionals and technology professionals. And really something that I'm very proud of when it comes to the team is that what we've done over the last nearly 6 years now is that what used to be incredibly difficult, you know, where you had management and maintenance, and that was just if you were doing local property. If you're doing international property, you were complex global tax structures and bank accounts, etc. And now you don't need to worry about any of that. In fact, it was Lee's husband who said literally in a couple of minutes, he could sit on a couch and invest around the world. He could get access to quality partners and quality opportunities. And on days like WealthE Wednesday, today, you can literally invest from $1,000, which, you know, really is quite exciting now. People can just focus on the best returns. I'm not going to talk to you about our track record. I did go through it at lunchtime, and I really think and encourage you to go onto our platform. You can actually see all the deals. You can see the track record. You can see, you know, what has happened, both the good and some of the projects that haven't worked. There's, you know, specifically 2. The majority of them have worked, and we've even, you know, we've now had 6 exits, and we've just had another big exit actually close at the end of July, which is really, really exciting. And when you look at the overall track record, if you think you're the first person that's come on this webinar and you're all alone, well, you're not. To give you a bit of peace of mind, we've now got members in 133 countries. We've done, you know, $565 million worth of deals. We've had $90 million go through the platform. We've paid out over $8 million in dividends. We've won numerous different awards. And there's something that I'm proud of is that up until now, we've had a 70% or higher reinvestment rate, which is really quite exciting. And so I wanted to move to Linden because there's really 2 focuses for this evening's webinar, Linden, which is that the intention was that, you know, I've literally run through that in the best part of, you know, 10 minutes as an introduction on purpose. And the focus for tonight was to run through the actual deals that are live at the moment, and secondly, then to run through the bonus section. And so my question to you, Linden, is do you want me to share my screen back to you, and we can run through the current deals and talk about them so that people can get a synopsis of the opportunities that can take advantage on the, you know, on WealthE Wednesday?
Yeah, Scott, great. Thanks. Good evening again, everyone. I'm very happy if you'll just do it on your screen since you've got it open. I am trying to get my camera. It looks like my laptop camera has stopped, so I'm trying to get an additional camera mounted quickly. Hopefully in the next 2 or 3 minutes, I have my wife scrounging around trying to help me here, but hopefully in the next 2 or 3 minutes, you'll be able to see me as well as hear me. But absolutely, let's go through those deals.
So you can see here that I'm just logging in and going straight into the marketplace. So what you can basically see is that I'm going to go into the first one that we've got on the platform, and you can see that this is Upside Avenue, a multi-housing income REIT. And Linden, if you could give us some perspective in terms of what this is all about, why this is something that people can look at, and also if you could explain the investment risk categories I know we did it at lunchtime, but I think it's worth repeating.
Yeah, absolutely, Scott. You know, Scott, we're getting actually, it's interesting on this particular deal. We're getting quite a lot of investors asking us, why have we got a REIT on the platform? Because they're saying, but Scott's always said that, you know, REITs are bad. And so it's taking us a bit of explanation to explain why there's a REIT on the platform. So for those of you who are new to the real estate world, REITs are real estate investment trusts. And it is when you invest one investment into it's almost like a unit trust, but specifically for real estate projects. And you make one investment into the unit trust in a way, and that unit trust will hold assets in 10, 11, 20 different underlying real estate assets. Why we normally do not encourage or support, we certainly don't list public REITs on our platform, is because they are public. In other words, they are listed somewhere on a stock exchange. And as a result of that, what happens is that whenever the markets get jittery or there's a recession, then people treat the real estate investment trust just like any other share. And your value can drop very quickly just based on market sentiment that has nothing to do with the underlying assets. Now, in this case, this is a private REIT, which means it is not listed on a stock exchange, and the value of your investment is always tied directly to the actual value of the underlying real estate. And in this particular case, these are partners that we've been operating with for, I think, 5 or 6 years in the Wealth Migrate sphere. And they have, every year they do a proper external evaluation of their real estate, and that's how they revalue your actual value of the underlying asset. Got nothing to do with sentiment. So that's just a question, a point there about the public versus private. Scott, coming to the risk categories, this is a very, very important component for any investor wanting to invest through our platform. Because it's so important, I can often be very long-winded in my explanation of the 4 risk categories, but I'm going to try not to subject everyone tonight to a long-winded Linden explanation. I'm going to try and keep it short and sweet. Basically, you can see that on the left-hand side, the vertical axis is your returns, and your bottom line is your risk. And as things move from left to right, your risk increases, but so does your return. Now, the first one, let's start with core. What a core investment is where you have a top quality asset, so a really good property in a top quality market. So central New York, London, any of the real blue chip areas. And your tenant inside the building is a blue chip corporate. You know they're not going to default on payments. It's very secure. The building's built. It's in great shape. Now, because those deals are so hard to find, the pricing on them is quite expensive, which means that your return relative to how much you paid for the building is not going to be that high. As you move to the next one, Core Plus, this will be the same kind of setup, a building that's already there, a good tenant, but either the building is not in such a prime position or the tenant might not be quite as good, and therefore your price will be slightly lower when you buy this building, and therefore there's a potential to get a better return versus the price. The next one up on the right-hand side is value add. This is where your risk starts becoming bigger. And the reason your risk starts becoming bigger on value add is that this is where someone, a real estate investment company, like many of our partners, they will have a look at this and say, you know what, we think we can buy this and increase the returns people are getting by doing something different, either changing who the tenants are or making changes to the building or adding a new development onto the side of the building, but doing something that will increase the value overall in the return you get. But because you are taking a bit more risk, you know, it's not like that the change they want to make is already in place. So there's a bit more uncertainty. They might try something, it might not work. The price of that building is probably going to be slightly less, which means if you do get the return versus the price will be higher. And that is why it's called a value add. You're taking something, you're making some change that's going to add value, and in return, you're expecting a better return. And then the last category on the right-hand side is opportunistic. And this is where it's really about there is an opportunity here. hence the name. Often a development from scratch, in other words, there's nothing there and they want to build something from new, or when they have taken a building that is completely run down and not earning well and will need significant change, either in its rezoning or the building itself, and they are betting that over time they can get a return. Now, the last thing just to note is the time where you get your return and the manner in which you get your return also moves from left to right. Where you're dealing with the core building, you have a tenant who's already in place, which means that you get your return almost from day one of your investment. There's rent coming in. You don't have to wait for it to be built. It's a blue chip client, you get your money. The next one, Core Plus, very much the same. The building's in place, you get your return. But as you start getting to value add and opportunistic, you might have to wait a while. It might take them 6 months or a year to do the changes to the building, 2 years if it's a brand new development. And therefore, you're not getting your cash return immediately. You're banking on a bigger capital gain or a slower return over time. So for those who are needing very secure income from the day they invest, Core Plus is probably a better strategy. If you want to mix both immediate income, but also bet that there's going to be good capital gain over time, Core Plus, value add. And if you're happy to say, listen, immediate income is not as important and we're going to go for a much bigger capital gain in the long run, then you're probably playing in the opportunistic field. So that was a real mouthful. I'm not sure if there are any questions anyone has on that or anything, Scott, you would like to add.
No, look, I think what we'll do is if there are questions, please type them and we'll come back to it at the end just so that we can manage everyone's time effectively. But I just wanted to mention also with this particular partner, there's a great video of me interviewing Monty in their office. They've won a whole bunch of awards, you know, in terms of fast company and all that sort of stuff. And they specifically have specialized in the sector of value add in terms of, you know, where they took opportunities. He always said that they like to go and find, you know, if you watch the interview, he said he'd like to find sort of hairy pigs or ugly buildings, you know, and fix them up because, you know, those were the ones where you could create real value. And, you know, one of our most successful exits was actually where they took a building, they fixed it up, they turned it around and they on-sold it, you know, very much a capital growth play in comparison with an income play. Whereas obviously with this REIT, and you can see there in terms of, you know, the risk rating, it's a balance between the income and the value add in terms of that process.
Yes,
anything else you want to add on with regards to this deal?
Yeah, maybe I can add on to this deal. You'll see there that the return on this particular deal is 11.4, so call it 12%. In chatting to this team, they are projecting that it'll be 6% a year that comes back to you in a cash-on-cash return, actual money you can get into your bank, and then they're expecting a capital growth in their investment of 6% every year. They normally, as you said, they're very good at the value add. For the next 2 or 3 years, they said they're probably going to become a little more conservative in terms of new acquisitions because the world is entering into a slightly uncertain state in terms of the next 2 or 3 years from an economic perspective. They might look for a bit more of certainty in going the Core Plus. So their portfolio has a very good balance between income and capital gain. And I think that's, from our perspective, it's a banker. And what I mean by that, it's, you know, you can have this in your portfolio and you know you're going to get a bit of cash return, but you're also going to get the capital gain. And because it's spread across 10 or 11 different properties inside of a REIT, you know, it's just going to be slow and steady, good returns, but nothing that is too risky.
Just to show you here, and this will be the same for all the deals, you can see the risk profile on the right. You can read all about it on the left. You can download all the documentation over here. You can see the risks, you can see the milestones, and then you can also read about the sponsor and also the due diligence process. So I just wanted to give everyone clarity in terms of that. And obviously they are focusing on multifamily, senior living, and student housing, which are all three strong sectors that we like. The next deal that I wanted to talk about, which was quite an exciting one for me, was that, you know, we've been wanting to have a South African deal come live for a long time. And this is a partner that I've known for more than 10 years. And what's really interesting is that this was also our first debt deal that has gone live. Do you want to tell us a little bit more about this one, Linden?
Yeah, sure. And as you mentioned earlier today, debt opportunities are becoming far more common. We're getting a lot of real estate firms approaching us and saying, can you list debt deals? Are you willing to? And the reason for this is that a lot of the banks globally are beginning to become far more restrictive in their willingness to lend money in the real estate space.
I just wanted to introduce my two partners who are coming to say hello here quickly. You got Paul and Ken.
Yeah, g'day, how are you?
They're sneaking into bed. But, they're sneaking into bed, but it's nearly 11 o'clock at night here. So anyway, sorry to let's get back to the development.
Yeah, no, absolutely. So there are a lot more banks around the world who are beginning to be far more restrictive in terms of the lending policies that they have. And this is creating a huge and very exciting opportunity for private investors to actually become in and make the kind of returns banks used to make by funding developments. Now, what I love about these guys, Private Opportunity Capital, is they've got a very smart way of reducing risk, even if it is a value add opportunistic space, because what they do is they divide the financing of a development into two different pieces. They get loans from private investors to cover the first pace, the first stage, which is purely the infrastructure build, putting the roads, the fences, the water supply, the sewage, and then they pay that out. So as an investor, if you're investing in that particular piece, you know you're going to get your money back much quicker than if you had to wait for the entire development. They then do a second round once they've got that, which is where they get a second round of investment for a 4 to 8 month period, which is literally to take the buildings from ground up to roof level, and then they sell. Now this deal, they're giving 18% fixed interest on as a return. You get your entire money at the end of the project. Sorry, per annum. Yep. Well, it's often because the deals are between 4 to 8 months, it's calculated pro rata, but the interest rate is at 18% per annum calculation.
Someone puts it in, you know, if it was 6 months, they would get 9%. You know, just to be clear. Correct. For people's calculations.
Yep. Brilliant. But you know, one of the reasons we made the decision to list this on our platform right now is because 18% is a really solid return. You know, often when you come across returns like that, you think, is this too good to be true? So, you know, we made sure that these are guys who have done this repeatedly. Their last 5 deals totaling 100 million rand in terms of the amounts that they got from private investors and have paid back have all been successful. They didn't default once on those last 5 opportunities. So we felt that it was a pretty good, safe to go with this partner because of their track record, and that's a great return opportunity.
I think 2 other things, Linden, which I want to re-emphasize. I did say it at lunch, but I think it's important re-emphasizing, is that, you know, you mentioned that globally debt is becoming more and more popular. So just last night in India, someone asked me, you know, about equity. Now, with equity, obviously, you get not only the interest or the income side, but you also get the capital growth. Whereas with debt, you get a fixed return. So it's a predictable return. You don't get the capital growth. However, you do get a first mortgage over the property. So from a risk perspective, it actually is lower risk than an equity position. And that's why it's become so popular in England, Australia, and America, and clearly it's becoming popular in South Africa as well. So from a risk perspective, there's 2 things that are important here. Firstly, you get a first mortgage over the property, which is really important. And secondly, you've got a predictable income. So you actually know what income you're getting that you can actually plan for, which I think is critically important. And the other thing which you didn't mention, Linda, which I do think is important, is that a lot of the capital that they use when they're building that first stage is their own capital. So their own capital is actually in the deal as well. And, you know, we always talk about alignment. And, you know, for me, that's a very, very important fact where they are aligned with the investors in terms of, you know, both the risk and the return, you know.
Yeah, absolutely.
Happy to move on. Anything else from this side?
No, I think this one's just from a compliance perspective, that deal is only available to South Africans at this point. They are unable to pay returns offshore. So if you have a South African bank account, then you can certainly be part of that deal. All right, let's talk about the UK deal, RB Care Homes. This one's interesting for me, and I'll tell you why it's interesting. Is over the last 6 months, we've had a lot of our top investors at Wealth Migrate asking us for UK opportunities. And when we press them on it, they say, well, and I think, Scott, this is something you've often said over the last 5 years about your real estate history and experience, that in a way, when there's blood on the floor, that's a good time to go looking for opportunities. And with the pound having done what it's done in the last 6 months, a lot of those investors were believing that the impact of Brexit has already been built into the price of the pound, and if you can get assets now based on a great exchange rate from offshore, you're in a good place. So we're very excited on this particular deal. Once again, nice to have new partners. This is our first deal with RB Care Homes. It's the fundamentals of this deal is they run care homes for the aged. They have particularly with people with dementia, Alzheimer's. What's really interesting is their business model. Their biggest tenant, or not their tenant, the person who pays the bills, is a UK government. So the UK Health Authority has an obligation to support people into care homes if they cannot afford to be in care themselves. And therefore, there is a huge demand around the UK for aged people with dementia to go into care homes, to the degree that, when someone moves out or when a room becomes empty, the UK government is very quick to put someone else in there and continue paying the bill. So it's we always say, if you think about those risk categories, one of the things about core and core plus investments is that you have a very solid anchor tenant who is going to keep paying the bills. And in this particular case, it's very, very difficult politically for the UK government to stop supporting people who can't afford it to be in care homes. So it's a pretty unlikely, this policy has been in place for decades, is unlikely to change. And these guys know what they're doing in terms of how to run these care homes in a way that's ethical, that really focuses on the people inside the homes, and yet also generate great returns for investors.
Talk to us a little bit, Linden, about the due diligence that we did in terms of going and looking it up. The beauty of the first world is that you've got the transparency, and tell us a little bit about the due diligence process we went through here.
Yeah, absolutely. So most of their care homes are in Wales and the UK. All of them are in Wales and the UK, and both those two areas have a regulated environment for running care homes, and those are open to the public in terms of reporting. So you can go onto the regulator in both Wales and the UK and go onto the sites of the institutions that regulate, and you can get their latest independent report on each of the care homes in the country. It's completely open to the public. Anyone who's listening can go and do it. You can go and search and find, for example, Danny Craig, and it will give you what the regulator's last report was. Now, when the regulators do the report, they arrive without announcement, and they do a thorough inspection of an entire range of operational requirements for a care home, and then they give a rating and they give recommendations on what needs to be improved, etc. Now, we did a whole bunch of research on some of the 17 homes that RB Care Homes done. The reports were good, and also interestingly, RB Care Homes won the UK Parliament's Best Practice Award in the sector, and they were invited to go and talk to Parliament as to how this sector should really be done in a way that's ethical and looks after patients inside the care homes. So we really very happy with the quality of the partner that we have here.
Three things that I think are important here, just to add. Firstly, obviously, we've always liked medical and aged care, because long-term, Clem Santa actually said that if you put a roof over the top of England, it would be like an old age home. And it's just interesting because you've obviously got an aging population. You've got all the baby boomers that have not only gone into retirement, but are now going, almost into sort of aged care facilities. And obviously, it's a big problem in the UK. So, there's actually quite an undersupply. The second thing that's important is Linden's already pointed out that you're dealing with the government from a tenant perspective. So, the American government and the British government and whatever are arguably your best blue chip tenants you can get in terms of that process. And the third thing that I think is important, which you didn't talk about, Linden, is that there's a fixed return of 10% cash on cash, which in pounds, I've been investing in England since 2002, and I've never, seen a cash on cash return of 10% in pounds. And the reason that they do that is that they actually charge more for the rooms. But you can see there, and it's written down the bottom here, that they keep a 35% stake in the care homes, and they allow for fluctuations. So if someone, if a room goes vacant and they need to replace it or whatever, it allows them to manage those up and down fluctuations, which is why they're able to pay out a consistent 10% return. And the other thing that I think is important is that they've also got a guaranteed buyback within 3 years. And so as an investor, it's a 3-year investment and you've got an exit strategy on the back end. So this is not a high capital growth play, but it's a very strong income play, which, we're going to talk a little bit now, about how to succeed and thrive within economic challenges. And one of the most important lessons that I can teach anyone is focus on strong income producing assets. So is there anything else on this one, Linden, or can we move on?
Yeah, just very quickly, as what they've done, once again, very clever and a great opportunity for the investors is they often buy care homes at a good price. And what they do is, they get paid the same amount per patient, whether that patient's in a care home in London or whether that patient's in a care home in a smaller town or village outside in the UK somewhere. So obviously, if they can buy care homes outside of the prime areas, so in other words, outside of places like London, their return on investment is much better because they get the same income per room, irrespective of how much they paid up front. So they're very clever in finding the right existing care homes, and with their ability and expertise in running them and making them really quality, ethical places, they can turn around a business. And in a way, they've traded the capital gain that might be available by putting it into the income up front that we all receive. So they have the capital gain is set at 3% a year in terms of your guaranteed buyback. So even if the underlying asset might grow more than that or less than that, you still get your 3%. And they factored that in by saying, listen, we're going to buy well, we're going to pay very good returns on an annual basis, and then the capital gain will be set because that they can work into their business models.
Excellent. I am conscious of the time, Linden. In terms of Glenridge Medical 22 and 2267 Upper Grosvenor, both of them are fully funded now. They're still on the platform because they haven't actually closed, so the funding is in, but they're just going through the closing process. I don't think there's anything else to add to those two. But I would like to talk a little bit around Meridian Medical 23.
Yeah, absolutely. Those two are fully funded. We can't accept any more investors into them. They are fully funded.
So tell us about Medical 23.
Yeah, I think we've got a long history on the Wealth Migrate platform with medical deals. It's a sector we know well. It's a sector that we really love because it's, as Scott has always said, because he's been a fundamental part of building the medical story for our investors over the last 4 or 5 years, that medical tenants are fantastic in that doctors very seldom move rooms, in particular when there is specific equipment related to their practice, X-ray machines, CAT scans, etc. And a lot of the modern equipment becomes even more difficult and expensive to install. So if you have a medical building that's got those kind of equipment, the doctors and the medical practitioners are there for a long time. And even if recession hits, people still need medical support. So medical is a story we like. It's proven to be very successful for our investors over the last 5 or 6 years. And Orbvest, the sponsor on this particular deal, have a lot of history in medical buildings and in running them. That's their focus. It's their niche. It's the only thing they do. They're prioritizing medical opportunities in the US. They have a team on the ground that looks for opportunities and buys them. I think you can see here that this one is a 5-year deal, 11.4% return annual IRR. So, it's a very stable 8% a year cash on cash return. Core Plus, you can see it at the bottom there because it is a building that has a good solid tenant base. Slightly smaller deal than some of Orbvest's other deals. This one is only raising 2 million, whereas most of them, they require 5 million. So it's a smaller building. The interesting part about it being smaller amount is that it's turning over very quickly. It was only released 2 or 3 weeks ago, and I think we're almost fully funded on this one. There's, I think in a week or so, we will be closed on this deal.
Yeah, so just in terms of this one, again, with Wealthy Wednesday, whether you're wanting to do the aged care in the UK or whether you're wanting to do a medical building in America or you're wanting to do both. With Wealthy Wednesday, you've got the ability to get in from lower minimums, but both of them are actually closing pretty quickly. So unfortunately, the opportunity is not going to be around for a huge amount of time. So I don't know if there's anything else in terms of the actual deals, Linden. We can come back to the people have any questions later, but I'd like to move to the bonus section of the webinar.
Yeah, absolutely. Let's do that.
Cool. So if you wanted to look at the updated UX, or if you want to watch the recording from lunchtime, Linden actually took people through how they can actually go online, how they can actually invest. I think it is pretty self-explanatory. I know some people ask, but if I just go back to the platform here, if I literally wanted to invest in this, I can, where has the invest button gone, Linden? Why is it not here? So if I go into any of the deals, basically, that's weird. Why am I not seeing it?
So Scott, it's highly likely that the account you're using to log in is not verified. So if you haven't done your KYC and been verified, you won't see the Invest Now button.
Please verify. So you can see in the top left corner, please verify your email. So yeah, the reason that I can't see it is because I haven't verified my email in terms of that process. So okay, point taken to me in reading the instructions. So let's move to the bonus. Basically, I did refer to the bonus that we did last month. Wealth 5.0. We are moving into the new decade. There's a huge amount happening now with Society 5.0, with Entrepreneur 5.0, with Wealth 5.0. I'm not going to go through this tonight. If you want to, I'd highly recommend watching the WealthE webinar from last month, where we went into this in a huge amount of detail. And for those people that are on our inner circle, we're going to invite you on a journey and make sure that you're ready for 2020 and the future in terms of where we're going. I wanted to talk tonight around some of the mistakes people make. What's really interesting for me is that the bonus session that we wanted to talk about was how do people not only survive in a recession, but actually thrive. And it really starts with the mistakes. And what's really interesting is that the first thing people do is that when times are tough and when there's suddenly an economic crisis, they make crisis investments. A good example of this was my mother in 2001, when the Rand ran against the pound. It went to 24 Rand to the pound. My mother's financial advisor, recommended that she take her money, her Rands, and convert it into pounds and invest in the British stock market, which went nowhere for about 5 years, while the JSE, had a really good run. And then basically, the financial advisor told her to bring the money back at like half the value and put it into which then went nowhere, for a whole amount of time. And the real problem with most people is that, Linden already mentioned it, and it's people like Warren Buffett that say, when there's blood on the streets, you take opportunity. The problem for most people is that when they're in crisis, they make crisis investments. And what I've learned from wealthy people is that they're prepared and that they're strategic. And a much better story is my uncle, who in 1980, he was living in Zimbabwe, he was earning foreign currency, and he literally used to take some of his money and he'd invest it overseas in first world assets and first world income. And 23 years later, in 2003, at the age of 53, and if you do or don't know, it's very hard to get into Australia when you're 45 or above, he was able to buy his way into Australia. He was able to buy a house for cash. He was able to put his kid through a private school. And I always joke with people, but he didn't have to work for an Australian. And that's a classic example of the difference between people who lose money, where they're making crisis investments, and people that are actually strategic. The second thing is they don't get the right information. So a lot of people, tend to get fear mongering, and they read all the press reports and everything else, and they get the wrong information. And even people jump on an airplane, they fly to London for a week to watch rugby, and they go and speak to the estate agents, and they think that they're going to get the right information. But the problem is they don't get the right information. They have the wrong partners. There are people that are not aligned. I always joke with people, if Linden and I were going to run a business together, and he wanted to build a great business, and I just wanted to go surfing all the time, is it actually going to work? If Lee and I wanted to get married, and Lee wanted to marry for love, and all I wanted to do was marry her for love, for money, would it actually work? And everyone that's watching this webinar is probably going, no, there's no ways. Well, what's fascinating for me is that why do then people invest with brokers or financial planners where they make their money up front, and yet your objective is to create long-term wealth? You're not aligned, and then we wonder why it doesn't actually work. Often people don't understand the cash flows and the management and actually what's involved. They tend to work with companies that aren't local and international. It's all good and well to say, oh, yeah, go and invest in a country. but do they actually know what it's like? Have they ever been there? Do they have local experience? Do they have boots on the ground? People often underestimate the sales and the costs, involved in the overall thing. And then finally, the one that is so interesting, and it's the same here in Mumbai at the moment, which is where people buy off plan and they put down 10% and they think they're going to double their money in a year or two. And then when the market changes, because they've gone after capital growth, it's like betting against winter. And so the wealthiest people in the world, they focus on income producing assets, whereas middle class and professional people focus on capital growth. And I always say to people, whether you're in England or India or America or Australia or South Africa, I always say to people, when you buy residential houses or apartments, how many of them are actually cash flow positive? How many of them are actually earning you an income? And very, very few people tend to put up their hand. And yet when I ask them, so why are you investing? They say, well, I'm investing for capital growth. And I go, well, there's the problem. Because when you focus on capital growth, it's like betting against winter. And then when an economic crisis comes or an economic correction, that correction is like winter. And when winter comes, I've heard some great sayings over this and in the last crash. A guy called Peter Feenstra said that even in a hurricane, a turkey can fly. And what that basically means is that all people and all properties look good when the wind is behind them. But when you have an economic collapse or an economic crisis, that's when the fundamentals have to stand up, both in the property and in the partners. And that's where really wealthy people focus on income producing assets versus capital growth. The other thing that's really important is that people need to understand long-term trends. You've heard me probably tell you the story about shopping centers, and it just amazes me because in South Africa, people tell me, no, but e-commerce is never coming to Africa. I was in India just yesterday, and the number one thing they like to buy is A-grade retail space. And yet in America, all the shopping centers are going bankrupt. And just last week, a report came out of one of the top South African investors, all the top South African investors, all the top financial companies in South Africa, Coronation, the Public Investment Corporation, Sanlam, Investec, Old Mutual, Standard, and PSG are all invested in the top large property company that owns all the top shopping centers in England, and they've lost 30% of their value. And for me, this is just a classic example of people not focusing on long-term trends and getting caught out by technology. And I tend to joke with people, as long as you can put an ad in the airport, then people should trust you, because that's obviously the most important thing, versus actually focusing on these long-term trends and what is happening around the world. When one looks at local versus offshore, one of the most important things with regards to what Ray Dalio teaches us, and there's this great book, I don't have it on me, but anyway, it's called Unshakable, and it's by Tony Robbins. And he went out and he basically said, Ray Dalio said that the most important thing to succeeding when it comes to wealth is that you've got to have 15 uncorrelated investments in attractive assets that don't move in tandem. And so if you, no matter where you're living in the world, if you're living and have all your money in New Zealand, Christchurch, when they had the earthquake, you would have a major problem. If you had all your money invested in American property when it lost 40 to 70% in the last crash, you would have a major problem. If you had all your money in Zimbabwe or Argentina when they had the currency devaluation, you would have a major problem. And that's why it's critically important. In a country like South Africa, the rand is devaluing by 6% a year, every single year, and has done for the last 30 years. They've got the same problem in India. They've got the same problem in China. And that's why it's critically important that you diversify across assets, across countries, and across currencies in terms of what you're looking at. And when you're looking to invest overseas, it's really important to understand that the majority of emerging world currencies are actually going down in value, and yet assets are actually going up in value. Now, I know this is a rudimentary graph, but if you look here, the number one thing that wealthy people do is that they have strategic investments rather than crisis investments. They can control the variables. They look for great opportunities where their capital can unlock potential. And it's really important, because what I'm teaching you now are the philosophies of how to be successful, not only in good times, but also in bad times in terms of what's happening. And when you look at the pitfalls of investing locally and how people lose money, or the pitfalls of investing offshore, they literally are exactly the same. in terms of where people are and the problems that people have. And that's why we've written 3 white papers. So if you're a rank beginner, you can read the white paper on the 5 laws to building wealth through real estate. If you're an intermediate and you want to start investing offshore, read the 5 keys to offshore real estate investment. And if you're highly sophisticated, read the 4 ways to expand your global real estate portfolio through strategic partnerships. And we will share these white papers with you, because we don't care whether you want to invest with us or not. What we do care about is that you've got the right information so that you have the freedom to make the right choices. As Nelson Mandela said, money won't create success. The freedom to make it will. And I wanted to give you 2 stories, which for me really epitomize what I'm talking about. Back in 2001, we had September the 11th, and it was the last time, it was the second last time that the market crashed in London. And it was interesting because England was going to war with Afghanistan, and all my mates were like, "Oh, are you crazy to buy a house? Because interest rates are going to, oil price is going to go up, which means inflation will go up, which means interest rates will go up." And it was really interesting because me and my mates, wanted to get into the property market. You can see the date here is 2002. And we went out and we bought this house here in Wimbledon, which is where the tennis is. It was a 3-bedroom house. And what was fascinating, myself and my friend bought it together. And he actually wanted to go up on the hill, and he wanted to buy this beautiful 2-bedroom apartment. And we were both single at the time, and I always tend to joke with people, it was a great way to get a girlfriend because it was beautiful 2-bedroom, 2-bathroom apartment with beautiful views. But it would never have made us any money because I would have lived in the 1-bedroom, he would have lived in the other bedroom, and there was no way to create income. This property, on the other hand, which is, it's an ex-council flat, so it's not a terraced accommodation, if you know what I'm talking about, in London. It doesn't have any ego or sex appeal. But what it did have is it was a 3-bedroom house, and by putting a conservatory onto it, we actually turned it into a 5-bedroom house. And so he stayed in the 1-bedroom and I stayed in the other bedroom, and it allowed us to rent out 3 other bedrooms. And from the day one, we actually earned more than £1,000 passive income on this property. Now, why is this important? Take the lessons that I've taught you already tonight, that income is the most important thing. And what I did is I sat with my friend, his name is Warren, and I said, listen, if we do this on this property, and if we've got more than £1,000 passive income, even if interest rates go up, we will still be able to absorb that risk. My uncle taught me that as long as you can manage the worst case scenario, then everything else is upside. So always try and work out what the worst case scenario is, and then everything else is upside. And what's interesting is interest rates never went up, and we bought these properties at amazing prices. And as I said, literally to this day, this property's earned us at least £1,000 or more passive income per month. And what was fascinating is that most of my friends who told us not to invest waited another 5 years and then started investing in 2007 when mob mentality got involved. And literally a lot of them actually, lost money, because the next crash was 2008, 2009, where the property market lost, between 15 to 20% in London. Now, what was also interesting is that in any property market, you only ever lose money if you sell. So in London in 2009, the property market lost anywhere from 15 to 20%, but it literally only lasted for 12 months. I know of some people that had a commercial building, and they sold it in October of 2008. It was in Green Park, London, and they sold it for 50% of its market value. And less than 12 months later, it was back to full value. And so again, this is such an important concept of how do you not only survive in a crash, but how to thrive. Well, the first thing to survive is to make sure that you've got a very solid income producing asset, because then no matter what happens in terms of the capital values of the property, you just hold the property. When we had the last crash in London on this particular property, our interest rates actually went down. In fact, they became £26 a month, which is ridiculous on a £300,000 mortgage. And our Sky, our DSTV, was £59 a month. I mean, it was amazing. I just wish the crash had lasted for much longer in terms of that whole process. So that's a good example of a residential property. It's about adding value, it's about adding income, and most importantly, if you've got a solid income stream where there's more demand than there is supply, then no matter what happens in the global economy, you just ride through the storm. The second thing that I think is critically important is in 2009, Linden's already spoken to this, but I'd helped about 2,500 people invest in properties in England, Australia, America, and South Africa, but they were all houses and apartments. And I remember meeting two very wealthy, gentlemen that were in Bondi Beach, Sydney. And I've always fascinated what wealthy people are doing. I'm a big believer that you should always copy what successful people are doing. And I said, what are you investing in? And this was actually the building. I was standing outside it, and they said, we're investing in medical properties. And I was like, why medical? And they said, well, think about it, Scott. No matter what happens globally, people need doctors. I was like, geez, it was the middle of 2009. There was absolute chaos, and that made perfect sense. The second thing is that doctors never leave their premises. I was like, wow. Like, I go back to my childhood, and even though in my case the doctors died, the premises are still medical. And the third thing is that doctors are hell of a good at being doctors, but they're not good accountants, and so they sign very good long-term favorable leases. And this was just amazing to me, and I wanted to participate in the deal. In those days, it was 5 million Australian dollars each. They only had 8 spots. They raised $40 million. Today, this company is listed on the Australian Stock Exchange for more than $700 million. And from 2014, we've actually been helping people invest in medical buildings through the platform. But what was also interesting is that in 2012, 2013, I was the one to actually get Henny to come to America. He had never even been to America. And I said, listen, there's a tremendous opportunity in America. And we started looking for medical buildings in America and copying what had been successful in Australia. And what was interesting is that when we met our partners on the ground, I remember asking them, I said, listen, the American residential market lost between 40 to 70%, depending on which city you were in terms of capital values. What happened in the medical sector? And they said, Scott, we didn't lose one tenant, not one tenant. And so right through the crash, which has been pretty much the worst crash in American history, arguably between that and the Depression, they didn't lose one tenant. And so those tenants, just like my house in London, kept paying all the way through the recession, depression, whatever you want to call it. And even though capital values might have gone down, they didn't lose anything because they never sold anything. And so what was really, really interesting is that, they just rode through the storm. And then this is the second part of not how to just survive a crash, but how to thrive. Because if you've got great properties that are earning you a great income, you actually have the firepower to then take down great opportunities. Because what tends to happen is that middle-class people and professional people that are chasing capital growth, they bet against winter, and then winter turns up. And when winter turns up, you have a tremendous buying opportunity. And a great example of this was a building in Greenwich in London. So this building was due to be launched in 2008 in London. So Greenwich is right next to Canary Wharf. It had just had the Jubilee line put in. There was huge amount of construction and growth in the area, and there were a whole bunch of reasons why it was going to be a phenomenal area. But then the crash happened. And what was really interesting is that we were able to go to the developer and we negotiated a 26% discount off the market value price for the investors. So we helped about 20 investors invest into this building, and they got 6% discount off the market value in terms of the price. Now, why did the developer do that? Well, they'd already incurred a lot of the cost. They already owned the land. They were already building the project. They'd already sold a number of the units. And so for them to have a number of units that they couldn't sell, the opportunity cost is too big for them. And so it's easier for them to sell those units off at cost. Now, remember that the average developer is trying to make a 25% return on their capital. And so if you can negotiate 25, 26%, they're not actually losing money. All that they're losing was their profit. Okay, and this is a classic example of going up the value chain. Now, I've met investors that invest in this deal. In fact, I had lunch with one 2 weeks ago. He bought 4 units off me for cash. He bought them for £400,000, and he sold them over the last 2 years for £1.2 million. Now, just as a matter of interest, can anyone work out the return of if you buy a unit for £400,000 and if you sell it for £1.2 million, how much return is that, not even taking into account the rental growth? Can anyone type that in? Because this is a classic example of what Linden was talking about when there's blood on the streets, there's opportunity. Because in 2009, I should have been able to help 100 people invest in these buildings. I should have helped 200 people or 500 or even 1,000 people. How many of you would have liked to have invested in a building that you were buying a unit for between £250,000 to £400,000, and you knew that in the next 10 years, you would be able to sell that for double, if not triple the price. If you're realistic with yourself, how many people would have liked that? And yet in 2009, everyone ran away. And as I tend to joke with people, they had short arms and long pockets, because they thought the world was coming to an end. Another great example, and ironically the exact same gentleman, this building here in Wimbledon, there was a very well-known prestigious developer called Barrett Homes. They'd actually built this entire unit. It was fully finished, it was fully furnished, and they had 48 units left, which we could buy. It was the remaining 48 units. And pretty much when a developer has 48 units left, they just want to sell them in a fire sale. They actually just want to get out because they generally are exposed to the banks and a whole bunch of other things. And we could buy all 48 units for literally half the price. Okay, they were finished, they were furnished, and they were tenanted. And we could have bought them for a 12% return, a net return. I mean, it's like unheard of in London, specifically in Wimbledon, to get 12%. And yet my problem was I needed 10 million pounds. And so I ran around to all our investors, including the guy that bought 4 units off me in that London deal I just told you. And I just could not get people to work together. I tried to go to the developer and I tried to actually buy 1 unit on my own, and they literally laughed me. They physically laughed at me and laughed me out of the room. And so a massive lesson I learned is that, I said then, right, we're going to build a platform to ensure that we are ready for the next crash, so that we have the ability, because when the crash happens, people get scared. And when they get scared, they don't take advantage of opportunities. I sat, the guy's name is Don. I sat with Don 2 weeks ago, and he said, geez, we should have done that deal. I'm like, dude, you have no idea. We would have bought units in Wimbledon for £160,000 with a 12% net return that today we could sell for probably close to, £700,000-800,000, probably even closer to £1 million. We would have 4 or 5 times our money, and the whole time we would have earned a 12% return. And so what is the lesson? Well, the lesson for me was that, we tend to joke, but there's a thing called a vulture fund. And what a vulture fund is where when you see when there's a lot of smoke, there's going to be fire. And what I learned in 2007, 2008, there was a lot of smoke and I didn't pick up the smoke. I basically thought to myself, no, it's not going to happen. The supply and the demand in London is fine, and blah, blah, blah. And yet where there's smoke, there's fire. And every 10 years, there's an economic correction, and we are well due for an economic correction. And so I made a promise to myself then, and it's one of the reasons why we created Wealth Migrate, was to allow people to come together to have the buying power so that they could take advantage of opportunities. And one of the things that I believe that we should be doing as a community is coming together and preparing, getting a stash of cash ready, call it a vulture fund, call it whatever you like, so that we can take advantage, because in any market, when there's blood on the streets, there's opportunity. And if you focus on good core assets with income producing potential, you can ride through the wave, so you can not only survive, but then you can take advantage of the crash, which is how you actually thrive. And so my question to you is, what are you doing to be a global citizen? In the next year or 2, possibly 3 years, there's going to be tremendous opportunity as we move into this next decade. And what are you doing to prepare? What are you doing as an individual? What are you doing collectively as a community? I can tell you what we're doing, and that's why we're working so hard on Wealth 5.0, as we get ready not only in our individual capacities, but in our collective capacities, so that we can take advantage of the opportunities that are coming. Linden has mentioned some of the deals, and we've been through them tonight, and you'll notice that all of the deals we're going for from a risk perspective, where it's all income producing assets, because it's really important that one is preparing for where the world is going and the lessons that we've already shared. Another thing that I wanted to just share with you is that, in terms of our inner circle, now you can go and read all about our inner circle, and it's really important. There's 5 things to our inner circle. So on WealthE Wednesday, you've not only got access to deals at $1,000, but our inner circle is normally $250, and on WealthE Wednesday we dropped it down to $9 a month or $99 for the year. But you need to take action today. There's 5 reasons why you should join the inner circle. The first is that we're only as good as the 5 people we hang around. And so it's all about being, I always like to put myself in a place where I'm the dumbest, poorest guy in the room, because it only means that I can get better. 2 is that, in the 20th century, it was all about learning while doing. In the 20th century, it's all about learning and then going and doing. reading a book or doing a course and then going to do it. The 21st century is all about learning while doing. I can tell you what to do in a crash. I can coach you till you blue in the face. But what's really important is, are you part of a team that's going to be able to execute in a crash to take advantage? The third thing is, it's about mentoring or coaching. I gave the stats earlier today, which I found fascinating. If you try and do something on your own, you've got a less than 50% chance of succeeding. If you do it with a partner, you've got a 60% chance of succeeding. If you do it with a like-minded community, you've got a higher than 70% chance of succeeding. And it's interesting because it's literally based on nature's laws. A bird flying in a flock can fly 70% further than a bird flying on its own. And the question I've got for you, are you a bird on your own, or are you a bird flying in a flock in terms of where the world is going? The fourth one is, it's about compressing time. If you take what Linden took us through there, it would take you, I don't know, half an hour, hours to read through all those deals. And yet Linden has literally summarized all the top deals in 15 minutes. That's about compressing time. And the fifth one, and the most important one, is that in life, your results are 80% about psychology and 20% about execution. And it's all about self-belief and making sure that you're getting access to it. So we will share with everyone the eWealth pack. If I go here, it's a pack that we put together. I'll put it in the chat box. For those of you that are watching the recording, you can see that it's wealthuniversity.org/eWealth pack. It's $5,000 worth of value, but we're actually giving it to people for free for a limited time only. And you can literally go here. You can join our different groups. You can get access to my book. You can do our investor test. You can literally do the micro degree on the 8 steps to wealth. You can join the inner circle. You can read all the white papers that I mentioned. I get asked all the time about all the best books to read, and you can see them all here in terms of the books. And then there's loads of resources between blogs, life hacks, websites, and even courses that we highly recommend. Literally, this is the last 20 years of the best information that we could find, and we put it in one place so that you can get access to it. I'm a big believer in life. Why go and reinvent the wheel? Why not just copy what is already working in terms of where we're at? And so, Linden and Lee, that is a uber fast version of some of the major lessons that I think are critically important for people as we not only try and survive where the world is going economically. I was going to bring up a whole bunch of websites. Obviously last week the Fed cut the interest rates in America. A lot of people are worried about that. New Zealand cut the interest rate just today. There is smoke, and whether you're listening to Ray Dalio or there's another great article that I read today, there is smoke, and when there's smoke, there's fire. And as investors, we can either run scared from it, or we can actually say, hang on, this is a tremendous opportunity. And I can tell you one thing, I've learned a lot from the last 2 crashes that I've been involved in, and I'm certainly going to be taking advantage, not just surviving, but actually thriving. And hopefully today we've shared with you some of the lessons that I believe people can use. And by the way, there's plenty more. I just wanted to use some of the high level ones today, and obviously as part of the inner circle, we can go a lot deeper in terms of that. Lee or Linden, there's a lot of questions that we've got here, but before we go to those questions, any comments or thoughts from your side?
I think you summed it up quite correctly, Scott. Thank you very much. That was a very powerful and informative webinar. Definitely gave food for thought to everyone. And by the questions and comments that are coming through, you've definitely got everyone's juices going. So thank you very much.
Awesome. Yeah, so let's just look here in terms of what people wanted. Oh, sorry, Linden.
Yeah, quickly from my side, I think there is smoke. I think we're seeing it in so many different places and so many different times, and I think it really is the right time for people to, myself included, yourself included, all of us, to really start thinking about what are the smart strategies for the next 2, 3, 4 years, because I think it is this is the time to make these decisions.
And it's fantastic. And you know what's so interesting, Linden, is that back in 2008, 2009, although I had 2,500 investors, we didn't have a community, and therefore we couldn't take action together. Whereas now we do have a community, and we can learn, we can grow, we can act together, and we can take advantage together. And I think that's deeply exciting, in terms of where the world is going. So I'm very grateful, and quite frankly, I'm looking forward to it. In terms of, Lee being the fairy godmother, lots of people, had things here, and Graham said freedom of choice. I think one of the things that we're passionate about, Graham, is obviously people actually having the freedom, building the life that they want, building the passive income that they want, as a bonus session. And one of the things that I've been doing, we've been on roadshow for 4 weeks. I've been sharing with people how they can do the investor test and also how they can do the micro degree, so that they can learn how to build the passive income, so that they can have that freedom of choice no matter where they want it in the world. From Leon's perspective, protection from rand depreciation. Well, Leon, hopefully we've shared with you tonight. I did say this at lunchtime today. It was so weird. I met someone last night in Mumbai, and he said his dream was to own a London property by 2025. And I said, well, actually, you can go online today and invest from $1,000. And he was like, what? And he couldn't believe it was even possible. And it's just so interesting for me. We've all got the ability now to be able to participate. Paula said, this is my first time and I'm wanting to learn more. So hopefully, Paula, we've shared a lot with you, and with the eWealth Pack, please go and read it. There's so much information there. Sue said more information on the retirement complex in the UK with the 10% cash on cash. I hope, Sue, that we've answered your questions, and if there's anything else, let me know. Steve has said, why South Africa is going bankrupt, what then? I must admit, hanging around with Ken Williams here in Mumbai, he's an ex-investment banker with sort of 20 years knowledge, and he talks to me about the fiscal deficits and the Twin Peaks deficits and all the negativity around the South African economy, and it is a bit scary, actually. But for me, I've always been a global citizen, and all my investments are in first world assets with a first world income, and so I think it's really important. It's not just a South African thing. We all need to diversify globally, and I don't believe, like I've said already tonight, that you should have all your money in America. I don't believe you should have all your money in South Africa. I don't believe you should have all your money in New Zealand. It's now about diversifying, and that's really important. The trade wars between America and China are getting really interesting, and just today, Moody's said there's a good chance the world will go into recession by 2020 if it continues. And so where do you focus? Well, you focus on first world income, you focus on first world currencies, you focus on assets that are going to be protected, and that's not shopping centers, and it's not offices, as an example, and it's also not the stock market that's at an all-time high. I don't know if you know this, but Warren Buffett is sitting on the most cash he's ever sat on, something like $120 billion in cash, because he says the stock market is overvalued. Now, that's something that I find really interesting. Paula said we are close to retirement and we need to create residual income and income not connected to the rand. So hopefully, Paula, we've answered that question for you. If not, please reach out to any one of us as a team, and we would happily help you with that. And I would highly recommend doing the investor test and the micro degree to give you more confidence. Like to start to invest on my own terms. Donnie, this is a classic one. For me, I believe that the world has changed, and we've all got the ability to take control of our destiny. And I love using the story of my brother. He used to put his money into a pension, and he decided to take his money out of the, he's a doctor, and he had his money in the, the South African pension system, and he decided to take it out. And even though he took a short-term hit with regards to, paying the tax or whatever, he's now in control of his own money. He's investing on his own terms, and he's not only investing and getting results, but he's also learning. And what is that power of learning about the different assets, the different currencies, the different countries? I think that is absolutely priceless. Susan has said, how long will it take approximately for you to come to the stage where we can invest with only $1 to be able to allow us all to invest? Susan, we would love to get there as soon as we possibly can. Our next eye is on creating a $100 investment, and I think we're still quite a long way off $1, but we are looking to bring down those minimum investments as fast as we possibly can. Stephen said, hi, I have 2 questions about the Upside Avenue REIT. When will the deal close? It says July the 31st, which is already passed. And the second one is, why is the investment term limited to 5 years? What will happen afterwards? Do you want to answer that, Linden?
Yeah, sure. So what Wealth Migrate does is we have, let's say on this particular deal, there might be 50 or 60 investors who we are aggregating into a single structure that then invests into that deal. Now, as I'm sure you can imagine, if in 5 years' time, for example, there are 50 or 60 people, some who want to stay, some who want to leave, some who want to maybe even get out earlier, it becomes almost impossible for any platform like ours that aggregates investors into investments to manage that process. So we have to treat the deal as a single investment, and we have to come out at a single time. And we have to be clear about that for all investors at the time they invest. So there's no debate, and we're trying to solve the very complex and impossible problem in 3 or 4 years' time of how to keep all 60 investors happy. So that's why each of our deals does have a very clear exit strategy. Most of the time, that exit strategy is actually designed by the sponsor, where it's actually a deal that they are selling at a particular time. In this particular case, this is even though we are investing into a REIT, a unit trust structure, we need to be clear with the 60 or 70 investors that are going to be part of this investment when we will leave, so that they all have clarity, they understand the conditions at which we are coming into the deal, and that it's very clear for everyone when we will be leaving. And I think it relates to someone else's question for later. We do have a bit of flexibility that if it's a really bad time in the market for us to be exiting, so let's say the property market has really crashed for whatever reason, we can have a bit of flexibility, and we will engage with shareholders and say, guys, you know, this is a really bad time to be selling. If we wait another year, it might be better. Or if after 4 years it's a really good time, even though we said it's a 5-year deal, we might also go back to the shareholders and say, you know, we believe this is the right time to exit right now, and therefore we will do that.
And I mean, again, we actually learned that from that whole philosophy, Linden, where that property that I told you in Green Park, where there were 4 investors, and you know, literally people wanted to, you know, 3 of them wanted to stay in and 1 wanted to leave, and they sold it at such a terrible time. And you know, from that story is why we created the 80% voting ability for people, you know, to be able to make intelligent decisions both in up markets and down markets. There's a question here from Donnie, said, would like to know, I did see on the first deal term 5 years and the second deal 6 months. Do you have to keep the money in the deal for the whole time? So Donnie, a couple of things. You'll see that there's different lengths of the deals. There's one for 5 years, there's one for 3 years, there's one for 6 months. We would really encourage investors to, you know, invest in deals where they're comfortable to stay in for the investment period. You know, this is a property investment, and it makes sense. You know, we're not trying to create liquidity where people can get in and out. We have had a secondary market before, but it's not very liquid, and to be honest, it's willing buyer, willing seller. So I don't want people putting their money in and phoning us up in 4 months and saying they need the money for their children's school fees. You know, that's not what we're trying to achieve. And so it's better to, you know, what Linden and the team have done very effectively is you've got a different range of options between a 6-month deal, a 3-year deal, a 5-year deal, and it allows you to create the flexibility and the different options for yourself, basically. You know, Leon asked the question, what are the option scenarios at the end of the investment term? I think Linden has covered that. You know, every deal we go into, we do look for different exit strategies. As an example, on the aged care, they've actually got a buyback, as Linden's already mentioned. In terms of the medical deals, one of the things that we've been doing is bringing them together, seasoning the rent, and actually selling them on to a big fund. And so, you know, in the UK deal, we're looking to actually piecemeal the unit up and sell it off as 3 separate units. So it's just every deal we go into, there is an exit strategy or even a couple of exit strategies that are planned. Whenever you buy something, you should actually have an exit strategy. And then obviously, as you get closer to the time, you determine, you know, what the best way to do it is. I think this is the one that you already answered from Johan. What happens when during the exit time, Wealth Migrate properties after 5 years, there's blood in the streets? So I think Linden already answered that. That's why we've got the 80% ability to vote to extend for another 2 years. Exactly as I said, you know, in any market, and I've been doing this for 20 years now, generally there's blood on the streets for no more than 2 years. And if you just hold, you can ride out the cycle. And as long as you don't sell, you don't lose money, which allows the...
Yes,
yep.
Maybe I can jump in here because I think it's important for our investors to understand. 90% of the time, we will not have a say when a deal exits. So in other words, there is a sponsor, a real estate investment company that is running the deal, and we are one of the investors into that particular deal. They, as the investment company, control the entire process. We are just one of many investors that might have funded that. The only times where we really do have a big say in the exit is, for example, on the REIT, where it is ongoing. It's not a single deal, it's an ongoing unit trust, and you can come in and out in that scenario. But just important to note that when a sponsor is going to make the decision as to when they're going to sell their building and get everyone their returns, they themselves have their reputation to look after. So they don't want to necessarily just sell something if it's a bad time to sell it, because they're an investment company. Yeah, correct. There's an investment company, don't look good, but then they also themselves don't make as much money. So the decision is normally in all these kind of deals, not only through our platform, but just in general, when you invest in a real estate investment firm, you're an investor into their structures. They make the deal, and part of your choice as an investor, make sure you are investing with sponsors that you trust, and that you understand what they are thinking about the exit strategy is. So it's very seldom that we as Wealth Migrate ever make this decision. We just, that's not the way the investment is structured.
No, I think point taken, but I do think it's important that people understand that, you know, how these things work, and you know, in terms of what I've just explained, it's very important to have these different controls and balances in place so that you can ride the ebbs and flows of the market in terms of where the markets are going. I'm not sure, Lee, if there's anything else. I've looked through here in terms of all the different questions that everyone asked. I know Sue has asked for more information on the retirement complex. What I'd suggest, Sue, is if you want to reach out, I mean, I know you've got my details personally. If you want to reach out, we can, you know, I can happily help you, or make sure that Linden, you know, can reach out and give you the information if it's not everything's included on the platform, or if there's anything else that we can assist with. And I'm not sure if there's anything else. I'm conscious of the fact we're coming up to 90 minutes, and the fact that I'm keeping everyone in Mumbai awake by talking loudly. But you know, I've actually quite enjoyed tonight. I love sharing, you know, around the sort of the whole crash scenario, because it's interesting. For the last 4 weeks, I've done presentations, and it just reminded me of some of the critical stories. And again, these are not other people's stories. These have been my own personal stories, and watching how people have made real money, you know, when they were prepared to act, when they were strategic during these times, and equally how people have lost money by being in crisis mode and being, you know, focusing purely on capital growth. So it's just really, really interesting. I'd love to know if anyone's got any comments around what I said, or whether they agree with it or disagree with it, or whether they learnt anything. And I'll hang on for another minute or two if anyone's got any feedback and or any final questions, and we can look in terms of closing out. What I'd like to do while we're waiting for anyone else, Lee and Linden, Lee, maybe if you go first, what are your closing thoughts and comments around what I said in terms of, you know, some of the lessons that we personally learned, and also after watching very wealthy people not only can't even speak anymore, not only survive but actually thrive, you know, during economic challenges?
You know, Scott, I think it's important for us, and you say it so often, and we echo the thought here, that learning is hard. So you find someone who has already done it and succeeded, and you follow their path, and that's exactly what we are trying to do here on Wealth Migrate, and that we are trying to follow the paths of those people who are already doing it so successfully. We also watch what they do in times of trouble, and that is what is so important. So when there is smoke, there's definitely fire somewhere, and the best way to protect yourself is to diversify. So thanks very much for your thoughts.
Awesome, thank you very much, Lee. And from your perspective, Linda? So weird talking to Linda when his name says Scott Picken at the bottom. It's like confusing me.
Yeah, because I was having problems with my camera earlier, I had to log in via a second login. So hi everyone, I'm Scott. No, you know, I think the lesson here for me is really be clear about income assets, income generating assets, and particularly have a look at sectors that are going to be recession proof. I think that's a very good point. And just the last thing I actually want to say is, if anyone wants to get more information on the UK deal, we are at Wealth Migrate. We pride ourselves on having great technology, and one of our recent technology innovations is to really see how we can give you the information you want in a journey that you want quickly. And so we have now got a great service on Messenger, a chatbot service that actually allows you to customize your own as you get on Messenger. It takes you through a deal, and you can say what you want to find out next. So in the chat section of this webinar, I have put a link. If you click on that, it'll open up the UK deals journey on Messenger. and you can just click it, and it'll open up your messenger, and you can take yourself on a guided tour through the deal and the information. Once again, if you've got any questions on any of the deals, please just reach out to me, and I'm happy to help out.
Also, you can see what Linden's talking about, so you can check what Linden. If someone's watching the what's it called, the recording, how do they reach it? Is it in this link at the top here, www.messenger.com/t/wealth migrate, and then they'll be able to go straight in?
Yeah, you know, Scott, the great thing about the technology is there's an easy way. If they find us on Messenger, just search for Wealth Migrate and find us, and then just send us a message that literally has the 3 letters RBC for RB Care Homes. As soon as you type just that message RCB, it'll automate this particular journey, and you'll get the flow started that takes you on all the information through Messenger. So yeah, Scott, if you click on that yes please at the bottom, we're very polite. We want to make sure before we give you information that it's what you actually want. So we say, hey, listen, we believe you're looking for this. If that's correct, please click yes please, and then it'll actually take you on a journey, giving you all the information you need about that particular deal. You can watch the webinars, you can download brochures, you can watch the short video, you can chat to one of our team members. It all activates from that particular point.
Wow, Sue Stahl, I think we created this exactly for you. So this is where people can actually go. So I'm very glad you mentioned this. We didn't actually mention this, Linden, at the lunchtime session, but you know, I do think it's worth us putting the links, and I know you put it on the digital real estate group, and you know, I think Lee, possibly what would be also very valuable is if we could put this on the Facebook page, just in terms of, you know, link on the Facebook page. So if you just go to Wealth Migrate, the Facebook page, then we'll actually put the link so that people, you know, could get more information. And you can see exactly what Linden's talking about, you know, the different things you can do, watch the video, download a brochure, watch the webinar, etc. So it's really interesting. It takes you on an automated journey in terms of being able to, you know, to find out all the information that you want, which I think is absolutely fascinating. So well done to the team for doing that. That's really, really awesome. Okay, I think probably from my perspective, that is everything. Thank you to a couple of people that have said that they enjoyed the webinar. It was very informative. You know, for us, we're always trying to add as much value as possible. I hope that we've done that again tonight. If you want to reach out to any of us, you know, I do encourage people, you know, join the inner circle. We really want people to be part of a community. We want to hold your hands. We want to come on a journey. We want to succeed together and get results together. And you know, there's so much that we want to share, and there's no ways that we can do it in one-off webinars, etc. We want to take the community together and help all of us succeed. And then obviously, you know, on WealthE Wednesday, we drop the minimums down, and you can literally invest in deals. You've got until midnight GMT time to be able to partake in that. You know, there's no ways the medical deal and or the care homes deal will be available in a month's time. And so if you do want to participate, you know, I highly recommend that tonight you take advantage of that. And, you know, really from my perspective, I just wanted to say a huge thank you to Lee and Linden. You know, it's always a big thing to do 2 webinars in one day. So thank you very much for coming online and sharing all the information. Lee, thank you so much for, as always, driving the WealthE Wednesday. You're doing a huge job with the team. So really, really appreciate that. And to all of you that are online tonight, it's wonderful to have you. There's been really nice interactive. Thank you for all the great questions. And, you know, I always ask people, and I'm going to finish with it, you know, I believe that the world is changing, and I believe we've all got a responsibility now to be able to share with people. You know, we've said that there's smoke, and where there's smoke, there's fire. And therefore, not only for ourselves, but I believe we've got a responsibility to share it with others. And so you're going to get a link to this webinar. If you want to share it with your friends, please do. You know, we want to empower, you know, our aim is to empower 1 billion people, and we cannot do it on our own. The only way we can do it is if we work together, if we share the knowledge, and ultimately give people access to not only the knowledge, but the self-belief, and then the ability to get access to opportunities. And so thank you very much for being online tonight. It's been wonderful having you. Love the energy, and I hope that you go out and share it with others. And as I said to Linden and Lee, really appreciate your time. Thank you very much.
Yeah, thanks guys. Thank you for joining us. It's always a pleasure to be online, so thank you, Scott. We look forward to seeing you back on another WealthE Wednesday on the 4th of September. We'll have another hot topic where we'll put Scott to the test, and Linden to run through our deals and tech updates. So we hope to see you then. In the meantime, if you want to get any more information, if you have queries, suggestions, or questions, please just reach out to any one of us.
Yeah, also, and I think Lee, you just reminded me, sorry, Linden, but for the Inner Circle in August, we've got Graham Codrington. I mean, he's an amazing guy in terms of the world. In fact, the timing couldn't be better. I was talking to Clem Sunter on the weekend. We're going to aim to get Clem Sunter coming up probably in September. So we've got some amazing speakers coming up in terms of for the Inner Circle. And then the other thing which is critically important is that, if people want core topics, please reach out to Lee or myself. Most of you have my WhatsApp, and let us know. What do you think are great topics? Every WealthE Wednesday, we want to do a bonus session with something of real value to you. And so let us know. We're always interested in how we can add more value. Anyway, sorry, over to you, Linden.
Yeah, great. I think from my side, I just want to welcome any new investors. We look forward to a long journey with you. We're really committed to making this vision possible, to empowering a global audience to invest in great real estate, diversified around the world. Thanks for joining us tonight. Really looking forward to having a journey that takes many, many years in community and in partnership.
Awesome. No, well, thanks very much. And I echo that, Linden. Thanks very much. Lekker. Well, it's midnight here in Mumbai. It's time for me to go to bed. We've got lots of meetings tomorrow, and wonderful to have so many of you from all over the world. Have a wonderful evening to the end of this WealthE Wednesday. Have an awesome month. Cheers.